Welcome back to Investing Talk Podcast.
Today we're looking at Mobix Labs.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us out.
It definitely does.
So I want you to imagine walking through the headquarters of a major defense contractor.
You're probably picturing, massive factory floors.
Right. Tens of thousands of employees, heavy machinery everywhere, the whole industrial complex vibe.
Exactly.
But what happens when the critical technology powering one of the most famous defense systems in the world?
A system the U.S. Navy heavily relies on, by the way.
Yeah, exactly. What if that tech is actually designed by a team that is quite literally smaller than the staff at your local grocery store?
It completely forces you to reevaluate how modern defense supply chains actually work.
It really does. And that is exactly what we are unpacking today. We're doing a strategic analysis of Mobix Labs.
And just to set the baseline for you listening, they are fundamentally a semiconductor company. But they are operating way outside of generic mass market consumer electronics.
We're not talking about like smartphone chips here.
No, not at all. Their focus is advanced wireless connectivity. Highly complex RF technology, millimeter wave, switching systems, EMI filtering.
The stuff that goes into high reliability sectors, defense, aerospace, 5G infrastructure, advanced medical devices.
Places where the margin for error is essentially zero.
Exactly. So our mission for today's analysis is to really unpack the recent strategic wins, look at the mechanics of this highly unusual business model, and figure out if they actually have a sustainable moat here.
Because landing a headline-grabbing military contract is one thing.
Impressive, sure.
But building a durable long-term business around it takes a very specific operational strategy.
Right. So let's move right into the fundamentals section of our syllabus here and look at that strategy.
And arguably the most compelling piece of the fundamentals is their headcount.
It's staggering. 46 employees.
Yeah, 46 total employees. And that is a deliberate structural choice built around what's called a fabless model.
Break that down for us.
So, by entirely outsourcing the physical fabrication of their chips to specialized foundries, they completely bypass the need to build their own manufacturing facilities.
Which would cost, what, billions of dollars in capital expenditures?
Billions, yes. It's incredibly capital intensive to maintain a semiconductor plant.
So instead of tying up all that cash in factory maintenance or a massive workforce, they just act as an intellectual property engine.
Exactly. They are the architects. They design the complex engineering of these custom chips, and then they hire specialized construction firms, the foundries, to pour the concrete, so to speak.
That keeps overhead insanely lean.
Very lean, which means they can pivot their R&D efforts rapidly as new requirements come in from their clients.
And I imagine that agility is a massive competitive advantage when you're dealing with the Department of Defense.
Oh, absolutely. The DoD and major aerospace contractors constantly need bespoke, custom solutions for next-generation platforms.
Right. And a legacy manufacturer might take years to retool a production line for a new custom part.
Exactly. But Mobix, since they aren't burdened by that physical infrastructure, they just focus entirely on engineering and design. They iterate on their proprietary IP so much faster than a huge, vertically integrated behemoth.
Which brings us to their current valuation metrics within these fundamentals.
Yeah, the financial footprint is super interesting.
It is. Their price-to-sales ratio is sitting at 0.84.
Which is remarkably low.
Under 1.0 in the current tech and semiconductor space. That's almost unheard of. Most established players in RF and wireless command PS multiples well into the mid-single digits.
Right, which strongly implies the broader market just hasn't priced in the revenue potential of their recent strategic moves yet. They are arguably very undervalued relative to their peers.
But there is a catch there, right? We don't have a traditional PE ratio for them.
Right, because they are currently in a pre-profitability status.
Which can sometimes scare off institutional algorithms.
It can, especially in a macro environment that punishes early-stage tech for lacking immediate GAAP profitability. But when you look at their capital allocation, it's a very deliberate growth strategy.
Yeah, they have a 0% dividend yield, no stock buybacks.
Because every single dollar of free cash flow is being aggressively pushed directly back into R&D.
They're advancing their proprietary millimeter wave tech instead of trying to show short-term paper profits.
Exactly. And honestly, for a fabless innovator in defense, if they were hoarding cash or paying dividends right now, that would be a red flag.
It would signal they don't have internal growth opportunities to invest in.
Right. Pouring capital back into custom RF integrated circuits
Yeah.
actively widens their competitive moat.
Which is the perfect bridge. Transitioning over to the technicals and this competitive moat they're building, what actually makes them special compared to a generic semiconductor company?
Well, generic semi companies mass-produce chips for, millions of laptops or smartphones.
It's basically commoditized at that point.
Exactly. But Mobix is designing hyper-specific proprietary IP tailored for mission-critical environments.
And when an original equipment manufacturer, an OEM in the defense sector, decides to use a Mobix component in, say, a radar system.
The certification process for that is grueling.
Right.
You have to undergo rigorous testing to meet extremely strict military specifications.
So the switching costs just become astronomical.
Astronomical. Once you are designed into a military platform and certified by the DoD, the risk, the time, the financial cost for that OEM to rip your tech out and replace it with a competitor is massive.
You aren't just swapping a chip.
No, you're triggering a recertification cascade for the entire defense system.
So it creates this incredibly sticky relationship. Once Mobix gets integrated into a product lifecycle, they're locked in.
Sometimes for decades. And the data validates this. Mobix has over 15 Fortune 500 customers.
Yeah.
And they maintain a 98% success rating across those deployments.
Getting a 98% success rate in high-reliability defense sectors is no joke. That speaks directly to their leadership team.
Oh, for sure. CEO Fabrizio Battaglia and CTO James Orellis, they've assembled a core group with over 100 years of collective industry experience.
Which you need. You can't just be a startup trying to learn government procurement on the fly.
No, it's a labyrinth. You need established relationships and a proven track record of delivering flawless IP.
And that track record is what finally ignited things. Let's look at the sentiment section now, specifically focusing on the massive catalyst that hit on March 3rd, 2026.
This is the inflection point.
Yeah. Mobix officially announced a production purchase order for components to be used in the U.S. Navy's Tomahawk cruise missile.
Just massive news.
We aren't talking about a small R&D grant here, or some testing phase. This is a full production order for one of the most heavily relied upon combat-proven platforms in the military.
Landing on the bill of materials for the Tomahawk is undeniable validation of their technology.
It elevates them overnight from a niche design firm to a proven supplier for national security infrastructure.
And the market reaction was explosive, as you'd expect.
Yeah, shares traded significantly higher, volume surged. They hit all the most active stocks lists, grabbing the attention of both retail momentum traders and institutional funds looking for microcap value.
But what's really illuminating about the sentiment here is the divergence.
Right, the decoupling from the macro environment.
Exactly, because if you look at the market psychology around March 2026, the broader macro environment was actually pretty neutral to negative.
Yeah, the data notes escalating geopolitical headwinds, specifically the ongoing conflict involving Iran. And just a quick note for you listening, our analysis of these tensions is strictly an observation of the market mechanics and capital flow. We are absolutely not taking any political sides here. We're just reporting impartially on the market drivers.
Right, we're just looking at the data. And the data shows that macro anxiety was causing broad market pullbacks.
But amidst all that caution, the news sentiment around Mobix was powerfully, explicitly bullish.
That is exactly what sophisticated investors look for. When a microcap surges on fundamental business validation while the wider market is stumbling.
It signals deep institutional interest.
Exactly. Because the Tomahawk contract is proof of concept. But the speculative value is the horizon it opens up.
Because in defense, proven reliability is the hardest currency to get.
Right. Operating successfully inside a Navy platform is a universal reference.
And the industry chatter suggests this Navy order might just be the tip of the spear.
Theoretically, if their millimeter wave IP meets Tomahawk standards, it meets the standards for autonomous drone comms, next-gen radar arrays, secure military 5G.
It essentially amplifies their entire aerospace and defense pipeline. It could accelerate follow-on military contracts that normally take years of bureaucratic tape to secure.
It's a huge pipeline acceleration. But as with any momentum play, a strategic analysis demands we look at the downside.
Right. Let's bridge over to the risk profile now and look at the bear case.
No company is without vulnerability, especially at this stage of growth. And the most prominent structural risk for Mobix is single contract dependency.
The tomahawk win is great, but leaning too heavily on one massive catalyst is dangerous.
Very. It exposes them to operational bottlenecks. We're looking at an early-stage company with unquantified revenue and debt metrics in their latest filings.
And if the DoD shifts its budget, or if the prime contractor delays the missile rollout, Mobix feels that pain disproportionately.
Right. A massive legacy defense conglomerate can absorb a delayed contract because they have hundreds of other product lines.
But a 46-person firm indexing heavily on this one Navy order, a timeline shift could cause a serious cash flow squeeze.
Exactly. And furthermore, their fabless model, while we talked about how efficient it is, it does leave them exposed to global supply chain vulnerabilities.
Because they still rely on external foundries to actually make the chips.
Right. If geopolitical tensions create bottlenecks in those semiconductor fabrication hubs, Mobix might struggle to fulfill this production order.
And it would be entirely out of their engineering control.
Yeah. And there's a secondary macro risk, too. They operate in the broader semiconductor sector, which is highly cyclical.
Acute sensitivity to global economic health.
Right. If those geopolitical tensions escalate and trigger a widespread market liquidation, Mobix will face intense downward pressure.
Because in a true macro sell-off, institutional algorithms just liquidate broadly across the whole sector.
They don't care about an individual microcap's specific contractual wins.
Although you could argue that low PS ratio of 0.84 acts as a bit of a counterweight.
It does. It suggests a significant portion of that systemic risk might already be priced in. They haven't been awarded a premium multiple yet, which inherently caps some downside compared to, like, an overvalued tech darling.
But still, the volatility of being a microcap in a turbulent environment is a systemic vulnerability you have to model for.
Absolutely.
So, synthesizing all of this, we're looking at a highly compelling, albeit volatile framework today. Mobix Labs is leveraging this incredibly efficient 46-employee fabless model to keep overhead low,
while aggressively reinvesting all their cash flow into proprietary mission-critical IP.
Right. They are punching vastly above their weight class in the defense sector, and that Navy Tomahawk contract is a profound technological validation.
But they are balancing that massive pipeline potential against the risks of single contract dependency and semi-cyclicality.
Right. So based on the quantitative analysis of all these factors, what is the final verdict here?
The final investment thesis in the Research Awards Mobix Labs, a bullish score of 7 out of 10.
A solid 7 out of 10.
Yeah. It frames the stock as a highly attractive potential swing trade heading into their upcoming Q1 earnings report.
And the logic there is all about timing, right?
Exactly. The initial contract announcement generated the momentum, but the Q1 earnings call is likely the first time the market will get to analyze the actual quantified financial impact of the Navy order on their balance sheet.
Transitioning from unquantified momentum to hard revenue data. And with a valuation that's still cheap against peers, it's a very strong near-term setup.
It really is a perfect real-time case study for anyone navigating microcap equities right now.
It shows exactly how a single strategic integration can instantly validate an under-the-radar company and force a fundamental shift in market sentiment.
And honestly, the broader implications extend way beyond just this stock's chart.
How so?
Think about it. If a hyper-focused tech firm of just 46 people can engineer and secure a vital component inside one of the military's most complex weapons systems,
it really signals a fundamental evolution in how we define a defense contractor today.
Exactly. We might be witnessing a structural shift away from the era dominated exclusively by massive, slow-moving industrial giants.
And transitioning toward an ecosystem where hyper-agile, specialized tech innovators are the ones actually driving critical national security infrastructure.
It's a massive shift.
It really is a fascinating thought to keep in mind next time you're analyzing global military spending and tracking where the capital is actually flowing. We'll leave you to explore the implications of that shift on your own. Keep your eyes on those upcoming earnings reports. Continue questioning the traditional industrial models. And as always, subscribe, like, and comment to support the show. We will catch you on the next one.